Hello, and we are live. Hey guys, I am here with Amanda McGowan, and I'm super pumped for this today because I know you guys have been sharing a lot of questions with me about your taxes, and she is our tax expert. So, Amanda, thank you so much for your time in advance. And tell us a little bit about you, how you got started with what you're doing, and exactly what it is that you do.
Yeah, absolutely. So first off, thanks for having me. I love talking anything having to do with taxes and numbers. I geek out on it. I got started in the industry actually completely by accident, but fell in love with it. And it's pretty much all I've ever done my entire adult life. I have a lot of friends in network marketing, and I got really, really aggravated listening to them all talk about how their accountant didn't take them seriously, thought they were just in the middle of a pyramid scheme, like didn't give them the attention they needed because they didn't think their business was real. And I often laughed at that because some of my friends that would bring this to me and they'd be talking to me about this, I'd be like, but you make more money than they do probably. So I don't know why they don't take this seriously.
Yes.
So about a year ago now, I decided that I was going to devote my practice strictly to network marketers, and we work with affiliate marketers as well because there's a lot of similarities, but we work with a whole lot of network marketers to help them understand like what's deductible in business, what is not. It's a highly audited industry to begin with. So anything you can do to protect yourself, I'm all for. We have a big focus with our clients on tax strategy and tax planning as well. So not just the ins and outs of money in your business, but also like how can you take things you're already doing? Like, for example, do you have kids that help you in your business? Are you paying them? This could be tax-free income into your household that you get to claim as an expense on your business, but it's not taxable to the household. So these are the things that I like to dive into with my clients beyond just like the bookkeeping and making sure they're in the right entity and the taxes in general. We also like to go that step deeper of like, okay, how can we now take, what you're doing and maybe save you, maybe it's only a couple $1,000s, but in some case it can be tens of thousands of dollars depending on where your business is at.
Right. Every little bit counts for sure.
The government takes enough of our money. We don't need to give them more than we have to.
Exactly. I feel like I say that so much, especially to my leaders. I'm like, guys, invest in your business, invest in coaching, because you're either investing in it and getting write-offs for it, or you're paying it all back anyway to taxes and like not actually getting anything from it. So I'm so glad you said that. And let me grab my pen and paper because you were saying some things. And I'm like, oh my gosh, these are some questions that I have.
Like, I need to take notes while we go.
I know, seriously. You said something and I was like, oh my gosh, I wasn't even planning on asking her that, but we'll bring it up later because I think it's something that's probably a little bit more, I don't want to say advanced, but something that not everyone maybe has to deal with. Okay, so where do we even get started? So let's just say I joined my business, let's just say the beginning of January, it's February. And then obviously we wouldn't have to pay taxes on it this year, but say I started January of last year. What sorts of things should I be keeping track of? Like what sort of insight can you give us with that?
Yeah, so a couple things that I recommend everybody do right from the beginning, from the day you decide you're going to be a network marketer and you're going into that, you have a couple things that you have to look at. And one of the first things I always do when I'm talking to somebody in that beginning phase is, are you serious about this? Is this going to become a full-time income, or is this something that you really just intend on making a few $1,000s over the course of a year? Maybe you want it to be like vacation money. Like, what are your intentions? Because that's going to set a lot of the guideline for how you do things from there. If your intention is to have it be a serious business, even if for you that looks like, maybe a serious business is $20,000 a year of revenue, that looks different for everyone. But if you plan on being serious with it, then one of the first things I recommend is that you set up an LLC with your state. Now, there's some states this may not make sense. Delaware, it may not make sense until you need it. California, it may not make sense until you need it. But most states, setting up an LLC is very inexpensive and simple to do. And I recommend doing it because what you're doing by setting that up is you're already telling the IRS, like, I'm serious about this business. I'm not just dabbling. I'm not here to play around and see what might be. I'm serious about my business. Setting up the LLC, you don't do anything differently tax-wise. It's just there that as you start to make money, you may want to have that LLC in place because there's some really cool things you can do with that LLC. that once you hit a certain threshold of income can actually save you quite a bit of money. So that's one of the first things I always say is if you're serious about this and you plan on growing it to anything substantial, then go ahead and set up that LLC. The second thing I always tell people to do is I'm like, get your EIN and start using that, because the more you have to pass your social security number around to anybody that's paying you, if you're doing trainings for someone else and they're giving you a 1099, you have to give them your social security number. If you don't have to hand that out, don't. So get an EIN and then set up a separate bank account. I can't stress that one enough, because multiple reasons, but let's just cover one of the obvious ones, is organization. When you're in network marketing, you have a lot of ins and outs coming in, and some of these companies, you get weekly pay, daily pay, monthly pay, like you get paid several times. So if you don't have a separate bank account, it's really easy for things to get lost in the shuffle of everything else that's going on. For example, let's say you go to Walmart and you buy a planner or a calendar for the new year, but then the next day you're at Walmart getting groceries. Like, if you don't have that separated, you're looking back and you're like, I thought I bought a planner at Walmart, but I don't remember when it was, and now I can't find the receipt. So set up a separate bank account. Even if you don't go the LLC route, have a separate personal account that you just have all your income put into and all of your expenses come out of. And then when you want to take money for it personally, just transfer it over to your other account. So those are kind of the things I would start with right out the gate, of like, you want to make sure you're taking a look and setting up those things. And then the other thing I always tell everybody when they're starting out is it's a lot easier to be organized and tracking things from day one than it is to get 13, 14 months down the road and be like, oh, now I have to go back and do all the numbers for last year, and I don't even remember what I did all of last year.
Yeah. Okay, so you mentioned receipts. We definitely need to save all receipts, right?
Yes. So the IRS, if you're to get audited, the IRS wants two things. They want proof of expense and proof of payment. Your bank statement, your credit card receipt suffices as proof of payment, but the receipt suffices as proof of expense because it shows what was purchased and all the details around that. So you do need to keep both.
Yeah. Yeah. How far back, if you were to get audited, do you have to show it? Is it just a year usually, or can it be longer?
So typically audits don't happen for at least about 2 years down the road, because that's just the time frame for the IRS to pick things up and realize, like, oh, we're going to randomly audit this person, which most are random, or we see something and we want to audit this person because we have something we want to investigate. So typically that's not going to happen for about 2 years. I always tell people, keep everything for 6 years. Once you hit that year number 7, that's the point where you're out of that audit window by the IRS. So it's safe to dispose of everything at that point.
Okay, that's because I was actually going to get ready and throw out some receipts from like 4 years ago. It was like an entirely different business, but I can keep it. Let's be real. I have enough clutter around my house. I can keep some receipts. It's not that big. Okay, awesome. Let me pull up. I actually had some questions from my teammates. And okay, this one I think I answered, but I'll put it on here anyway. So we are independent contractors as network marketers. What form should we be receiving was a question.
Okay, so starting in 2020, the form you would receive is a 1099 NEC, non-employee compensation. It used to be a 1099 miscellaneous, but now it's an NEC. That's what you should be receiving. And I'd love to expand on that a little bit. I actually just did a training in my group the other day about this, and I was kind of going over, like, what should you be watching for to make sure that's accurate? Because there's a lot of times that I'm going through this with my clients and I'm like, these numbers don't match with what you gave me. Why is this different? And so just know that not only are your commissions and your bonuses going to be on that 1099, but also if you get to the point, does Color Street do an auto bonus? I don't know.
Technically, yes, but no one watching this has gotten it. It's at executive level and higher.
Okay, so if you get to that point where you have an auto bonus, that's taxable income to you, and that'll usually show up on that 1099. If you win a trip with your company, the value of that trip will typically be reported on the 1099 because that's taxable income to you as well. So just be aware of those things, because I see that trip more people up than anything, because they're like, well, I planned for my income of this, but I didn't account for this and this, and I didn't plan on that being in my income when I was projecting my taxes.
Yeah, that makes sense. I didn't think about that about the trip. Especially since I don't know if we always know the value of that. So that would definitely be something for us to find out for sure.
Yeah.
Let's see what other question. Sorry, I have a tickle in my throat.
You're fine.
Ooh, this is a good one. How do you predict impact on tax return and adjust during the tax year to achieve desired outcome? Which I guess everyone's desired outcome could be a little different, but I think I get what she's saying.
Yes, I do. And I could talk on this one for an hour. So if I get going too long on this one, let me know. I will try to keep it concise and on point. So let me first start by saying exactly like you said, Lindsay, everybody's desired outcome is going to be different. But I do want to just encourage this because so many times I talk to people and they're like, I want a large refund. And I'm like, why? And they're like, because I like the big chunk of money. And I'm like, okay, great. But just know if that's what you like, that you're basically giving the government an interest-free loan because they don't pay you interest on that. They just give you back dollar for dollar what you're owed. So it's an interest-free loan. So I always encourage my clients, I'm like, if you like that big chunk of money, then how about we just set up a savings account at a bank that is really, really inconvenient to access, and we just take a portion of your money and we automatically transfer it over every month instead of paying taxes, because now you might earn a little bit of interest on it, and then you can still pull it out, you know, in February, March, April, and do whatever that special thing that you had planned on using your refund for us. So just wanted to share that.
Great point.
Ideal outcome when I'm working with my clients, an ideal outcome for us is a couple $100s on either side of zero. So we like to see that they owe a couple hundred or they're getting a couple hundred back, but we don't like much more beyond that. You need to look at your tax bracket, which is a little difficult to explain to you how to find. But basically, if you look at your tax return and you look at how much tax you pay, and then you look at what your total income is, not your taxable income, but your total income, and figure out what that percentage is, that's going to put you in a good place to know what tax bracket you're falling in. Now, that can vary as income goes up and down. You may shift up a tax bracket, you may shift down a tax bracket. But if you're filing as a sole proprietor in a Schedule C, know that right off the top, you've got about 15% of that that's your self-employment tax. So I normally tell my clients, as long as you're not making over like $50,000 in your business, then typically right around 25 to 30% will normally cover federal and state. Now, if you're in Ohio, New York, California, some of these places where you have local taxes, city taxes, school district taxes, that may not be enough to cover it in those areas. But typically about 25 to 30% is a good safe rule of thumb. But honestly, if you work with a tax professional, ask them, and they should be able to give you that pretty accurately. And if not, just use that trick of looking at what your tax is, what your total income is, and figure out that percentage. And then just know you need to factor in the self-employment tax also.
That's great. That's so smart. Yeah. I loved what you said about the interest-free loan too. Like it makes so much sense for sure.
And then I just want to add to that, in case this isn't a question that comes up, I want to make sure we're hitting on this. I get asked all the time, like, do I really need to pay my taxes quarterly? Do I need to make those estimated tax payments? And the answer is no, you don't need to. You can pay it all at the end of the year. But if you end up owing more than $1,000 to the IRS, they're going to penalize you for not prepaying it. So just know it is better and it's cheaper for you in the long run to just pay it on those quarterly dates, which in a normal non-2020 year are April 15th, June 15th, September 15th, and January 15th of the following year.
So does that mean that you actually have to file your taxes all 4 times, or like what does that mean when you file quarterly?
Estimated tax payments. So at a W-2 job, the employer is taking out your Social Security, your Medicare, your federal tax, and your state tax. When you file on a Schedule C, you don't have anybody taking that out for you. So this is basically just you taking that and saying, I've earned this much income. This is what I should have paid in Social Security tax. This is what I should have paid in Medicare tax. This is what I'm estimating I should have paid in federal tax. And you basically just send a payment to the IRS on those dates to say, hey, this is what I'm thinking I'm going to owe in tax for that past quarter.
Okay. That's actually what I wrote down to ask you about later, was about quarterly taxes. Because I've never done them, but I am definitely going to get penalized this year based off of how much money I ended up making. Okay, yeah, I wrote that down. All right. So I'm glad that came up. Is there any difference? And I kind of don't think so, but is there any difference in if you itemize and don't itemize? Does that matter with your business?
No, and that is such a common question. So I'm glad someone asked that. When somebody says they itemize on their tax return, you're talking mortgage, interest, property taxes, charitable donations, medical expenses, those types of things. More, or I wouldn't say more uncommon. I was going to say that. Let's say less common, because that's proper English. Less common now than it was several years ago, because the standard deduction is so high now. And so this is something that whether you run a business or not, you can either take the standard deduction or the itemized deduction. When we're talking business, you have to track everything, because there is no standard business expense for any business. It's what you spend. So you have to track all of that and be able to itemize those items out.
Oh, okay, great. Someone asked here in the comments, not sure if we have this on the list, but I'm curious how to claim internet and phone service if you don't use them 100% for business.
Oh, great question, Elizabeth. Yes. So phone, that is a pretty straightforward answer. So more often than not anymore, we all have our cell phone. That's what you're running your business off of. Most of us don't have a landline anymore or a house phone. And so if you only have one phone and you use it both, the safe answer is 50%. Now, I have some clients who are like, there is no way. I use my phone probably 80% for business. And I'm like, great. But the problem becomes most of that business is being done through Facebook, Instagram, all these things that we can't track the amount of time that you're actually, so you can't like take your data plan and be like, how much was I on Facebook? How much was I on Instagram? The only thing you can really do is look at the phone calls. And so if you're using it for phone calls, you can go through an itemized bill. And if you can highlight and say, okay, for 3 months of the year, I can identify that I used 80% in phone calls business related, then you can safely take that 80% for the year. But most people, it's not phone calls, it's other things. And so the rule of thumb there is typically 50% that you can take on the business and 50% has to remain personal. Internet, pretty much same rule. However, internet is one of those things that depending on your tax professional, they may say no, internet falls in a home office expense and you have to take it when you deduct your home office, which in most cases is probably going to give you a whole lot less, because I know my clients, they don't tend to have entire home office rooms. It's the corner of a living room, it's the corner of a bedroom. They sit on their couch and they just work from their couch. They don't have that home office deduction. Right. So internet, I would also say safe answer is 50% on that as well. But then anymore, you also have to kind of consider, like, I know a lot of my clients had to up their internet speed when their kids came home for school. And so I'm like, well, we need to look at what it was before we had to up it for purposes that were not business related.
Right. Now I know Elizabeth does have a home office. How will that change her?
So I would say you probably want to take a look at it both ways, because let's just use some straight numbers. If your internet bill is $100 a month, $1,200 for the year, you might be able to write off $600 of it as a business expense. But if you take a home office, and let's say that your home office is 25% of your entire home. So let's say you have a 1,000 square foot house, you have a 250 square foot office. So you're taking 25%, then you'd only be allowed 25% on the internet bill. So it makes sense to claim the 50% and do it outside of the home office at that point.
Yeah. Great. Thank you.
Great question. Thank you.
Yeah, there's a lot of variety in the questions. I really like it.
Ooh, I'm going to come back over to her other question before we go on.
Oh, yeah, sure.
So home office for small business has to be dedicated to that use. So if you have a home office, Elizabeth, that you're working in for your day job that you work from home at, but then you also run your business out of it, you actually wouldn't qualify for the home office because it has to be exclusive use. So I would say at that point, I've actually pushed a lot of my clients to go back to their employers since they've been working from home for COVID and be like, hey, can I get an office reimbursement of some sort for this, or ask them to reimburse something, because at that point you probably can't take much of it for the business. So I would say stick with the 50% on the internet as a business expense outside of the home office.
Yeah, that's smart. Yeah, I didn't see her comment. Yeah, Elizabeth, I completely forgot that you were at home for your full-time job too. Okay, someone said they have a regular full-time job, but will also be filing a 1099 for a side job. Are they able to file a second 1099 for Color Street? There's no limit on the number of 1099s you can follow, correct?
Correct, yeah.
File.
when you get a 1099 NEC or 1099 miscellaneous, whichever form you're getting, it should be a 1099 NEC. But when you get that, basically that triggers you to need to file a Schedule C if you're doing that in the capacity of a business. Now, a Schedule C, you need a different Schedule C for each business. So, for example, let's do a couple different scenarios here. So let's say that you run a network marketing business, but you also do some coaching. And so both of that could fall, because if you coach network marketers and you run a network marketing business, that could all fall under one umbrella of a business. But if you have a network marketing business and then you have a graphic design business that you run, those are two totally separate businesses. So you'd need to file two Schedule Cs with that tax return.
That makes sense. Yeah. Yeah. Cause I have some, like I have a planner for women in direct sales network marketing, and I'm planning on filing it in the same Schedule C. I didn't make nearly as much as I did with my my 1099, but yeah, I'm planning on filing it all under the umbrella of my name.
Exactly. Yeah.
At what this was a good one. I've never had to save my receipt. Well, we kind of answered this. I've never had to save my receipts because I always ended up with standard deduction. Is it different now? Am I able to deduct each business expense, or only if it adds up to a certain amount? I guess we didn't answer that.
We kind of did answer that, but your standard deduction is completely separate from the business. So almost when you're going through things throughout the year, just kind of think of your business as being like, almost treat your business like it's going to be completely separate, because it is a separate portion of the tax return, and save everything for that, because you want to have all those items to write off.
Yeah. Yeah. Great. And there's no limit on the amount you can write off, correct?
Correct. The only limit is the IRS has what we call hobby loss rules, which is very highly targeted. I mean, the network marketing industry in general is highly targeted because there's so much bad advice out there that's been given that people are utilizing right now. But it's also highly targeted because a lot of people go into it and it ends up just being a hobby and not a business. And so the only thing you have to be aware of is that 3 out of 5 years, so the first 5 years you're in it, 3 of those you have to be showing that you made a profit. So if you started in 2020 and you ran at a loss because you were doing coaching and all these great things to grow your business, fine, claim it all, file it with a loss. It's going to offset your other income. 2021, you still close at a loss, but not as much of a loss. Then you just need to know that in 2022, you've got to hit the ground running, because you have to show a profit, even if it's only $100 in that third year, because if not, you're risking the IRS coming back and saying, oh, sorry, this isn't a business, it's a hobby. I'm glad you make a little money in your hobby, but basically you can't claim a loss at that point. You can just take it to zero. And if they deem you a hobby, that's in place for the life of that business.
Oof. Oof. Yeah. That's a really great way to get the fire under your tushy, huh?
Yeah.
I'm trying to remember last year. I'm pretty sure I owed taxes, so I wasn't a loss last year, and I definitely wasn't a loss this year. Is there any percentage or any, so I feel like a lot of times we can get really in our head about spending the money on the training, on the coaching, because we want to make that biggest profit possible. Is there any kind of advice you can give on, like, it does pay off to to spend a little if it's going to help you in your business?
So I always talk about ROI, return on investment. And so it's going to vary for each individual, because here's the thing is, if you know that you're one of those people that you're going to take a training, because there's two very distinct people when it comes to taking training. Either you get so focused on the training and what they're teaching, and then you never implement. So you're always stuck in learning, but never doing. And then you have people that they take a training, they work with a coach, they implement, and they can go back and say, from working with that coach, I may have paid that coach $5,000, but I can track that it generated $25,000 of revenue because of what I did and what I implemented. So that's kind of my rule of thumb. Like, there's no proper amount to spend, but just spend smart. There's two things that I see that I'm not a fan of. One, it's throwing money out there just to have expenses, because a lot of people think, oh, well, I made a profit this year, so I just need to spend all my money in December so I don't have to pay taxes on it. I'm like, well, the purpose of being in business isn't just to not pay taxes, it's to make money. And if you make money, you have to pay taxes. But then also the second piece of that is, if you're spending, make sure it's something that you're going to implement. I've been really bad at this in the past. Is I get that, like, there's this training and I'm like, oh, I want to really do that training. And then I start looking and I'm like, okay, I have time to take the training, but I literally have zero time to implement beyond taking the training. So maybe I should step back from this one. So it really is just kind of analyzing yourself and looking at the cost and the investment. And I don't like to say cost because it is an investment if you use it the right way. So looking at the investment point on it and being like, okay, like, can I commit the time and the attention this needs to actually produce an ROI on this? That's how I analyze all of those types of things.
Yeah, I love it. I love it. If you're actually going to use it and implement it and it's going to be profitable for you in the long run, absolutely.
Yeah.
Guys, I see some more people hopping on. So if you have any questions about taxes, feel free to drop them in the comments because we are answering them live. Okay. Someone asked, should we track mileage for deliveries, trips to the post office, to the store to buy supplies, trips to live parties, etc.?
Yes. Mileage, and I always have to look it up because I'm always a year behind on the mileage number, but I think it's 55 cents, or it's right around 55 cents a mile. That can add up. So if you're going to the post office to ship supplies, if you're going to Office Depot to pick up supplies, home parties, deliveries, meeting your teammates for coffee or lunch to do like an in-person training, going and meeting somebody that you're hoping is going to become a customer and you really intend on meeting them to try and get them to purchase some strips from you. All of those things are tax deductible. So with mileage, there's a couple things that you have to capture in order to get it passed through an audit. And I'm going to tell you what you have to capture, and then I'm going to tell you a really easy way to capture it all without ever having to think about it in the moment. So you have to be able to identify your beginning of your mileage, or your mileage when you started that trip, your mileage when you ended that trip, what the purpose of the trip was, who you met, and what it was for. So a lot of people still do a pen and paper. I don't have time for pen and paper when I'm traveling for my business. I don't think about, I literally sat down last week and was like, oh, I need to actually record 3 months of my mileage because I was paying attention for 3 months. And this is what I do for a living. And I still, that part just slips my mind. There's an app on your phone. It's called Mile IQ, like intelligence, Mile IQ. I think for a business, I think you can pay $60 a year for a subscription. It's a tax write-off for you, so track it. But basically, you just put it on your phone. It runs silently in the background. I always get asked, is it going to kill my battery? It's never killed my battery. All my other stuff kills my battery, but not that one. And it just runs in the background. And then I always call it the Tinder of taxes. You swipe right, you swipe left. Is it business? Is it personal? And you just call it that way. And then at the end of the year, you can literally go in and email yourself a spreadsheet, and it has everything on it that you need to have your taxes done and be audit proof on that. So the only other thing around mileage that I would say is it's always a good idea to get a third-party mileage verification at the end of the year. So I usually tell my clients, I'm like, if you need an oil change, a tire rotation, any of those things, do that at the end of the year, great. If not, go to AutoZone and ask them to do a battery check on December 31st. Because when they do the battery check, they normally write the mileage down on it, and now you have a third-party verification. Because what the IRS is looking for on that is they're going to, when you go through an audit, they ask all these questions, and it's like they're being so nice and friendly and trying to get to know you, and they're really just trying to get all the answers out of you without you realizing that's what they're doing. So they're asking oh, I see you have kids. What ages are they? Do they go to the same school? And then you're just in conversation. You're going to be like, oh, no, I'm that parent that has 2 kids, one in high school, one in middle school, and their schools are 20 miles apart from each other, and I drive them to school every day. Now, the auditor's using their mind, and they're going, okay, 20 miles a day, 5 days a week, 6, 7 months out of the year, whatever that, I think, they're doing the math and they're writing this in their notes. And then when you give them that mileage report, they're going to be like, oh, so you say you drove 10,000 miles last year and 9,000 of it was for business, but you drive your kids 20 miles a day to and from school? The math doesn't add up. So having that third-party mileage verification just gives you an extra protection there when you are going through I'm going to say when, because at some point we're all going to go through one. But when you're going through that audit, you just have it there and you're ready to be able to be like, nope, here's where I was December 31st the year before. Here's where I was December 31st that year. This is what was business. This is what was personal.
Okay, now I can already hear some of my team members thinking out loud. They're like, okay, I didn't track my mileage. What do you tell them?
So this is not the correct way to do it, but this is what I would recommend you do. One of the things the IRS is looking for is called a contemporaneous mileage log, which basically is a really fancy schmancy way of saying that it can't all be done at one time. It needs to be done as you go. So what I would do if you don't have one is I would go back and look at your calendar, look at your planner, go back and start tracking all those things. Pull up Google Maps and start putting in your starting point and your ending point and just saving those, printing those out to a PDF and saving them. And that way, if you do get audited, you've now gone back and you've figured out your mileage. And I'd even make a note in your planner of like, hey, I listened to Amanda today and she told me that we needed to start tracking mileage. I hadn't done it, so this is how I'm fixing it for last year. But so just go back and add it up and just make sure that you're aware that the IRS may give you some pushback on that. But just, it's a simple thing of, I don't know what I don't know. I learned it. I fixed it.
Yep. And then another option, if they are feeling uncomfortable with that, is just not claim mileage, right? Just don't put it in there.
No. You can just not claim it. But if you drive a substantial amount for your business, I'm going to encourage you to take the time to go back and look.
Yeah.
It can really add up. You know, on the low end, we see it be $100, but I have some clients that drive quite a lot, and it's, you know, $1,000 of a write-off for them.
I think last year, and I didn't even realize it, but I went to a few events that were, you know, 100 miles from my house and just some smaller trips. And I think I got I want to say like $400 and some dollars.
Yeah. It adds
back just in mileage. Yeah. And I was like, wait, what? I'm like, this is awesome. Cause I wasn't even expecting that. And, honestly, it was just kind of the thing that, it popped up and I was like mileage and I was like, oh, and I do have it in like a spreadsheet that I keep. So yeah, mileage definitely. Now, and I could be getting confused with something else. Is there a portion where you can write off your car or no?
So vehicle expenses, you have two options. You can take the standard mileage rate, or you can take actual expenses. Now, either way, you still need to track mileage because the mileage is what's going to tell you what percentage of that vehicle is personal versus business. So if you're taking actual expenses, you can only take, so let's say you drive 40% of the time for work and 60% for business, you can only take 40% of the actual expenses. Now, if you're buying a car, your loan payment's not deductible, only the interest, kind of like when you're buying a house, like the mortgage interest can be a deduction, but the mortgage itself can't be. And so you have to look at all these things. I would venture to say it is a very, very rare scenario where I see a client in network marketing that the actual expenses outweigh the mileage, because the mileage is high enough that it's accounting for your oil changes, tires, your like all the maintenance stuff. It's accounting for the gas, the insurance, like it accounts for all of that. So more often than not, the mileage is going to be the better option for you.
Oh yeah, this is a great question. Did our business retreat from last October in Kentucky count as a business expense, including mileage?
Did you guys go there and do some training?
Yeah. So, it was a training weekend and everyone paid $250, for, it was lodging and training in one though. So how would we break that down?
So when you purchased it, was there a difference between this is what you're paying for lodging and this is what you're paying for training? Or was it like you're paying this for the training and you get the lodging to go with it?
It was, you pay this for the training, you get lodging to go with it.
So I would write the $250, the cost of attending, I would write off as a training expense. And then your mileage there and back would absolutely be. And then your meals, don't forget your meals, because when you're traveling away from home, your meals become a write-off for you. So normally when you're at home, we're going to kind of sidebar to meals here, but normally when you're at home, your normal breakfast, lunch, and dinner are not deductible. This is why the IRS has that funky rule around meals that you only get to deduct 50% of it, because the concept behind that rule being created was that if you go out to lunch for business, more often than not, you're buying your client or your customer lunch as well. And so you can claim theirs, but not yours. What ends up happening more often than not is everybody goes stag and you just buy your own lunch and the other person buys their own lunch more often than not. So you're still only getting 50% of that when you have a business purpose behind it. When you travel away from home, your breakfast, lunch, dinner, all of it's now business meals, because you wouldn't be having to eat out if you were at home.
Right. And then along with that, so we're flying to our conference in July, at least a portion of that flight can be taken off as well, right?
All of it can be taken off.
All of it? Okay.
Yeah. Now let me ask, what days do your conference fall on?
Oh, this year it's Saturday, Sunday, Monday.
Okay, Saturday, Sunday, Monday. So this is like, I'm going to throw you guys a really, really cool tax planning strategy here that I've even talked to tax professionals and they're like, what? I'm like, oh yeah, it's legal. Look it up. So sometimes I tell my clients, I'm like, if you're going, so you said it's Saturday, Sunday, Monday.
Mm-hmm.
So if you have, so like as a team, if you guys say, okay, we're going to all fly in Wednesday or Thursday so that we can have a little bit of fun. Where's the conference at?
It's at Orlando. We're actually staying later and going to Disney World.
Okay.
So we're going Friday through Thursday.
Okay. So what you want to do to make the entire trip tax deductible for you guys is throw some team trainings in on those last couple days.
Oh yeah, we can do that.
So because then here's the logic behind it is you have to fly in on Friday to be there for the conference on Saturday. Conference is Saturday, Sunday, Monday. But oh wait, our team also planned a training for Thursday morning at 9 a.m. because we're all going to be here and we're all going to get together for a couple hours and do a training. Well, it doesn't make sense for me to fly home on Monday to come back on Wednesday night. So now Tuesday, Wednesday are fun days, but the entire hotel, the entire airline, the entire car rental, all of that's tax deductible because you have to be there for a business purpose on Thursday.
Perfect. Love it. Yes. All right, guys. I hope you heard that. So you can all plan on coming to Orlando now. Writing all that off.
That's like tax planning, like secret there. I don't think I've ever told anybody in any of my trainings that. So you guys just got a really good bonus there.
Awesome. Thank you. Something else I was just thinking of when you said that, and this can be my last question because I know I've taken a lot of your time. Giveaways.
I love talking about this.
You're like, this is my jam. So giveaways, prizes, things that we give away. We should keep track of those receipts as well for everything that we do that. Correct?
Yes. And actually, I knew that's where you're going. So bear with me. I'm pulling up in my group I run. This is like our big focus last week was inventory because it's always a big question around this time of year. And so I want to kind of pull up what I put in here. Sorry if it cooperates. Okay, so I'm going to answer your question, but I want to give you guys some more information around that. So before I do that, I want to specify one thing because it kind of leads into this. Please know that your personal product, the nail strips you put on your own hands, are not tax deductible. And this is a very, very, very common misconception because people are told, and I literally watched a training in December from somebody who's like supposedly an MLM tax expert, and I was screaming at him through my computer. I'm like, that is so wrong. But your personal use product, even though you use it to go out and be like, hey, look at my nails, ladies. And I'm not going to show you mine because they're ugly at the moment, but hey, look at my nails, ladies. Like, this is what I do. Do you want to know? Like, I get that you're advertising, but it's your personal use product, so it's not deductible. So please know that right out the gate. Now, let's jump into inventory. So let's say we're going to talk that you actually carry inventory because I think a lot of Color Street reps do. You guys have stuff on hand to be able to sell on the spot, correct?
Yeah.
Okay. So let's pretend that you started your business in January last year, and so you start with zero inventory. So when you carry inventory, you need to do a count every year at the turn of the year. So right around that December 31st, January 1st, you need to do a count for what do you have on hand for your cost on the inventory. Because the tricky part with inventory, and this is why I always say carry what you know you can sell, but don't carry an excessive amount because you can't write that off until you sell it. It's not an expense just because you purchased it. It's not an expense until you actually sell it. This is that cost of goods piece. If you ever get asked those questions when you're doing your taxes or your tax professional asks you, that's what this is about. So you start the year with zero inventory. So let's say over the course of the year, you've purchased $3,000 in product. And you have $3,000 of product that you've purchased. So now your inventory is at $3,000 with that purchase, assuming no sales. Now you sell 1,000 of that, so your inventory remains at 2,000. But let's say that you have, your space where you keep it. Let's say you keep it all in a little tote, and let's say one of your kids comes through and spills milk on the tote, and it seeps in, and now the whole box is ruined. Now your inventory is back to zero. So that's where you get to claim damaged product like that. Now, giveaways, kind of the same thing. If you're sitting with 0, you purchase 3,000, you sell 1,000, but you give away $500 of strips over the course of a year in rewards to your hostesses or anything like that, you're basically just decreasing the inventory. So you're bringing that down now to 1,500, but you have $0 in sales. And so that's where you get the expense of it there, is tracking that inventory. So inventory is one of those things that, like, it took me, even with this being the world I live in, it took me a really long time to wrap my head not only around how it works, but also like, how do I explain this to someone who hasn't studied this for hours on end and help it make sense? Because it's very confusing. So just know, if you carry inventory, you want to do an inventory count at the end of each year, and that's your value, not the resale cost. And then you want to track everything that way. So you're not really tracking your giveaways necessarily. You're just tracking your inventory. Now, if that works for you, of saying, okay, I started with 0, I bought this, I sold this, I gave this away, this was damaged, however you want to track that, just know that it's all part of that inventory calculation. Now, if you carry strips, but you don't carry strips with the intent of having an inventory, if you're holding strips specifically for, hey, I'm going to do a giveaway on a Facebook Live this week, or hey, you've been a really loyal customer, here's a bonus strip that I want to send you, but most of your customers order online and have it shipped directly to them, that's no longer inventory. That now becomes an advertising cost.
Yes.
So just know, like, the product can actually be written off one of 2 ways, but one of 2, not both. So you either have inventory that you carry, or you carry quote unquote inventory, but it's not used in the sense of reselling. It's used to advertise and to bonus and incentivize people to purchase and refer and those types of things. So that's really how that comes in there. Clear as mud, right?
No, it actually makes sense, because so with COVID, that's when we really had to start having some inventory, because our website had like no sets. Now we're back to kind of normal, where an inventory really isn't necessary, like, at all. So like last year's taxes, I didn't do inventory. I did advertising, because most of our strips, I think I can speak for most of the women on here, we get them for free from our, so when we get them for free, we can't really do inventory, right?
So you can, it's just you don't really have a cost of goods.
Right.
So this is where you want to kind of strategize. So if you get enough free strips to be like, I never have to actually purchase any to resell because I get enough free ones, then just know that you can still track it as inventory. You're going to have a 0 cost to the sale.
Okay.
So the other thing, and this is where that strategy piece comes in, is if you get free strips, but you're like, hey, I don't have enough free strips that I still don't want to purchase some extra to have on hand, take the ones you're purchasing and put them in your inventory, keep the free ones separate for your personal use or those types of things. I always encourage, if you get free product, always try to make that your personal use stuff, because now it's a win-win. You're not spending money on something that you can't write off, and spend money on the ones that you can write off.
Right. Yeah, that makes sense. Yeah. So inventory really, for most of us, wasn't much of a thing until recently. So I'm glad you mentioned that and explained that. Because no, that actually makes a lot of sense. And I didn't think about all the giveaways under that advertising. So that's nice.
Yeah.
Okay. Is there anything else that you normally do in your spiel that I'm like missing? I feel like we've done like a little bit all over.
Let me see.
And then I'll ask where everyone can find you.
So I think we've covered like a lot of the questions that I initially get. We've covered those. And I'll just say, if other questions come up and they drop them in there, feel free to send me a message and I can get you an answer to post. Or, if they want to send me a friend request, they can ask directly of me and I'll make sure to answer that. Just make sure, I will tell you guys before we go into how you can contact me. If you send me a Facebook message, please make sure that you mention Lindsay's name in the message, because I get like probably 30 Facebook messages a day. Like, Lindsay, we had this happen last week where I'm like, oh my gosh, your message got to me. I'm so sorry.
Yep, I get it, girl.
Messages a day. So sometimes I'm like scanning through, especially in my ones that are requests of people who aren't my friend. I'm like scanning through, and if I don't see something to tell me how they're reaching out or what their question is, like if it doesn't pop to me that, okay, that person's actually reaching out not just to spam me for something, I tend to ignore those ones. So make sure that you mention Lindsay's name, because that way I'll see it and then it'll be like, okay, let me make sure I actually address this one.
Makes total sense. Total sense. Okay. How can we connect with you? Tell us the name of your free group, and you can also send me all your links and I can post them in here as well.
Perfect. Yeah. So I will, I'll pull that link up really quick and drop that in our private chat here so you can share that.
Great.
So feel free to friend request me. I'm on Facebook, Amanda McGowan. You can also, my group is called the Profit Corner for Network and Affiliate Marketers. In that group, I can't say I do. It's not all just numbers. It's mostly just numbers, but I do bring in some trainers occasionally that talk about things specific to network marketing. We talk a lot about mindset in there, money mindset, like belief mindset, a lot of that, but there's a lot of tax stuff going on in there. I go live in there every Tuesday at 3 p.m. Mountain Standard Time with a different training each week. Sometimes they're like, I think today's was like under 10 minutes. Sometimes they're closer to 30. But I do trainings in there each week, and that's just a really great place to drop those questions, because sometimes what I've seen, and the reason I created this group, is because there's a lot of tax groups out there, but the questions for this industry are so different and the answers are so specific that what was happening was a lot of network marketers were like, well, I can't ask that question publicly in that group because it doesn't pertain to 90% of what most people are dealing with. So this is a really great place to get information. I have a lot of well, I wouldn't say a lot, but I'm getting some more downloads in there. So like today I plugged in like organization is a topic that you really want to focus on. Like today's training was all about like a really quick spreadsheet of a profit and loss that I have that you just go in each month and you fill it out and it totals it up at the end of the year and keeps it tallied for you. So that's something that you're looking for. Like I have those types of things in there as well, but that's probably the best place. Friend requesting me on Facebook and joining that group is probably the best ways to stay in contact and get my information as I'm putting it out.
Awesome. Thank you so much. This has literally been so good. I thought I even knew all the tax stuff, and I learned some new stuff. So I'm about ready to go school my dad, because he used to do taxes like when I was a baby. So he's kind of been where I'm getting like my tax info from, but he even still doesn't quite understand exactly what I do with nail polish strips.
You make money doing what?
It was so funny. He was helping me do my taxes last year, and he's like looking at the 1099, and he was like, wait, what? And I was like, yeah, I told you, Dad. Like, what do you think I've been doing? And so I know this year he's going to see it this year, and he's going to be even more like mind blown. So this was good.
So, and I'll leave it with something on that very topic. Like if you work with a tax professional and they ever mention pyramid scheme or scam when they're looking at your stuff, please do yourself a favor and find somebody new. Because I know all my friends tell me I'm like a unicorn in the industry. They're like, nobody wants to focus on that industry. I'm like, I do. I love the people I meet. I love like all of it. Like it's fun for me. But if you're not getting that attention from your tax professional, please do yourself a favor and start finding somebody new, whoever that is. Just find somebody that's going to believe in you and your business, because from this side of the table, when I have belief in what my client is doing as a business, I'll tell you, it's a lot easier for me to give them the attention and focus that not only do they deserve, but that I want to, versus if I'm looking at a business model that I'm like, what in the heck are you thinking? Like, this is never going to work. Like, subconsciously, it just creates a block on our side of the table. So if they don't believe in your business model, if they don't believe in the industry, or if they truly just do think it's a pyramid scheme, like they're not doing you any favors. They're not advising you on, well, did you think about this? Or did you think about this? Or, hey, did you know when you take that trip in July that you can extend your trip a few days and just throw a business training on the end and have it be all deductible?
Yes. And last thing, can people work with you one-on-one for their taxes? I guess I never asked that.
Yep, absolutely. Okay. So if that's something somebody wants to do, feel free to reach out on Facebook. I'll send you a link to schedule a call and we'll see if we're a good fit. And I say that with all the sincerity, because I have a very bold and loud personality. I'm not a beat around the bush person. I'm like, people always tell me, they're like, if you want the truth, ask Amanda, because she's not going to sugarcoat anything. And I always tell people, I'm like, good, bad, ugly, I don't care. You're going to get it straight from me. Like, and if it's not what you want to hear, I'm sorry. But if you just want somebody to rub your head and be like, oh, it's okay, just keep doing, like, that's not me.
No, right. And I can totally vouch for that. I met Amanda on Clubhouse, and then it went like to Instagram, and then
we came across each other on
Facebook. I think it was in Beth's Camp Elevate. You like popped up there, and it was literally after I just Facebook friended you, and I was like, oh my gosh, this girl is everywhere. So I can totally vouch that she is sincere. She knows her stuff. I've watched at least 1 or 2 trainings of yours in other groups, and they've been just amazing, guys. So definitely reach out to Amanda for any of your tax needs for sure. She'll get you covered.
Awesome. Well, this was such a pleasure, Lindsay. Thank you so much.
Yes, thank you, and have a great night.
You as well. Bye.